Investors are looking ahead to the European Central Bank. President Mario Draghi's remarks this morning. We are waiting on the results of the meeting, the ECB meeting happening right now. Joining us right now is the Wall Street Journal's chief economics correspondent, John Hilsenrath, and Wells Fargo Investment Institute chief international strategist, Paul Christopher. Gentlemen, good to see you.
Thank you.
Thanks so much for joining us. Paul Christopher, let me kick it off with you. What are you expecting out of the ECB meeting today?
Yeah, a lot of caution coming out of the ECB today, and especially commitment, verbal commitment to supporting the currency and the economy going forward, but not much in the way of action.
So John, we basically expected that the ECB would say, look, we're going to be there if the economy worsens further, but it's been a story of currency, really, for the last year. That's been dictating markets. What do you see coming out of the meeting today?
Well, you know, they made their big moves earlier this year, pushing rates deeper into negative territory. I think they're on hold right now. They want to see how that plays out. And what I'm starting to look forward to is next week, if there's any big central bank that's going to act in the month of April, it's going to be the Bank of Japan. They're getting worried. You talk about the currency. That's exactly what their mind is on. The yen has gotten stronger, and that's a big problem for them. So they could come out next week with some new easing measures on their front.
It's funny, Matt Murray, the BOJ's problem has been a strong yen.
Yeah, everything that they've done to take it the other direction has not worked, and they're really feeling the squeeze a lot there, and it's a real problem for them.
Yeah.
To John's point, why would the Bank of Japan then do anything? Because it seems like the more that these central banks intervene and the more they try to do, it has the negative effect. Negative interest rates, what trading activity in the money markets over there dried up, and then the yen is at a year-and-a-half high, roughly, John?
Well, so Dagan, there's this psychology game that central banks are playing with the markets and really with the public, and you see this especially in Japan. Nobody wants to admit that they're out of ammunition, and that's especially the case with Kuroda, the governor of the Bank of Japan, because he's really put a lot of emphasis on promising the public that he's going to get to 2% inflation to kind of convince people that it's time to go out and spend money. If he admits there's nothing left he could do, then everybody gives up on getting the economy back on their feet.
Yeah.
So there's a psychology game they're trying to play.
We've sort of heard that. Yeah, go ahead.
Yeah, sorry. Isn't this great, though, for Christopher? Because if someone has negative interest rates, they'll want to put their money with Wells Fargo so they can make a little bit as opposed to going down.
Well, how do you see it, Paul?
Except that they're on the other side of the world. Look, the Japanese and the Europeans and even we are sort of stuck because global worries about China, about other things, about oil, are trumping the ability of central banks at the moment to make their policies work. I don't think they're out of ammunition.
You don't?
So much as so much as they're just in an environment where they would have to do so much more than is possible, really, given the negative sentiment. As soon as sentiment comes down, growth returns a bit, I think we'll see those central banks step up a little bit more.
So what's the bottom line here for investors? What do we need to be doing, knowing that we've got this stimulus action on all these central banks internationally?
Look, the central banks have taken a step back, and we can all exploit that as investors. The sentiment is positive sentiment is returning. What we really need to see is growth, and we see growth into the end of the year here and more overseas. And as that develops, then there'll be a chance for investors to take more cyclically oriented risk sorts of assets. We like equities. We like cyclically oriented sectors here in the U.S.
So
market.
our business community is going to make it happen.
We think that's
right.
always the case.
Yeah. It's all about growth, John Hilsenrath. That's what we're talking about for the 2016 election as well.
It is, and you know, I think one of the things, your guest used the term ammunition. I think one of the things that people are starting to come around to is that when we talk about ammunition and the government, we're looking at all the wrong ammunition. The central banks have done so much, there's not much more they could do. What this election ought to be about is what else can be done to promote growth on the regulatory agenda, on the fiscal agenda. I mean, those two areas in particular. Tax reform. You know, the people on the left are talking about more infrastructure spending.
Yeah.
You know, we have a regulatory environment that really is not supportive of growth right now. That's what the debate should be. It shouldn't be about central banks anymore. You guys shouldn't be asking me about what the Fed is going to do next month.
Yeah, you make a good point. John Hilsenrath, good to see you. Paul Christopher, always a pleasure. Thank you so much, gentlemen. We so appreciate your time.